What you see on your screens is a graph of silver prices on the NewsX in India throughout 2025, starting from around 87,000 to 90,000 per kg in January. A steady climb through the year fueled by massive industrial demand, and then this explosive parabolic surge in December, rocketing past 230,000 mid-month to an all-time record high of 254,174 per kg on December 29. But look at that sharp vertical drop right at the end, a brutal intraday crash of over 21,000 in hours on the 29th, dipping to lows around 231,000 to 233,000, followed by more profit-taking on the 30th and 31st, closing the year around 235,000 to 240,000 per kg. That's a 7 to 9% pullback from the peak in just days, after a year where silver delivered 160 to 180% returns. Hello and welcome to Deep Dive by NewsX. I'm Vaishali Kohli. Today, on this final day of 2025, December 31, we discuss the dramatic silver price crash that's capping off an absolutely historic year for the white metal in India. Silver has been the undisputed star performer of 2025, surging nearly 180% year to date, completely crushing gold's gains, all thanks to India's record-breaking imports of over 6,000 tons. Our aggressive solar and EV boom under the renewable energy push, soaring electronics demand and persistent global shortages. But that late December mania turned into a sharp, painful correction, wiping out weeks of gains in a flash. In December alone, silver prices accelerated wildly on MCX March futures, hovering at 210,000 to 220,000 early in the month before breaking 230,000 to 240,000 mid-month, climbing further to 232,000 to 251,000 between December 26 to 28 amid thin holiday liquidity, peaking at a lifetime high of 254,174 on the morning of the 29th, crossing 2.5 lakh for the first time ever, plunging over 21,000 intraday on the 29th to lows around 231,000 to 233,000 on heavy profit booking. Partial rebound on the 30th before more selling, and today, December 31 close, settling near 235,000 to 240,000 per kg, with spot prices in Delhi, Mumbai, Chennai around 239,000 to 241,000. Well, why did silver explode in 2025, especially in India? Now, India is the world's largest silver importer, bringing in over 6,000 tons in 2025 alone. And this massive domestic demand significantly amplified global price trends. The surge was driven by booming industrial usage, particularly from India's aggressive renewable energy push, with explosive growth in solar panel manufacturing alongside rising demand from electric vehicles, electronics, 5G infrastructure, and AI-related technologies, where silver's unmatched electrical conductivity remains irreplaceable, creating structural supply deficits. At the same time, a strong investment frenzy took hold, with retail stackers aggressively accumulating physical silver, heavy inflows into silver ETFs and safe haven buying fueled by rupee weakness and persistent inflation concerns. On the supply side, global shortages intensified due to low inventories in major ports like London and Shanghai, compounded by China's export restrictions. Adding further momentum were policy tailwinds, including silver's designation as a critical mineral and expectations of a weaker dollar alongside anticipated interest rate cuts. Now let's talk about the crash itself. Why did it happen so suddenly? This was a classic case of extreme overextension meeting forced selling. After an unbelievable 40% plus rally in December alone, technical indicators like RSI shot above 90, screaming overbought. Year-end profit booking kicked in aggressively as investors locked in massive gains for tax purposes. The CME Group's weekend margin hikes forced leveraged positions to unwind rapidly, triggering stop-loss cascades that rippled straight to MCX. Thin holiday liquidity amplified every move, turning normal selling into a rout. A temporary easing of geopolitical tensions and a slightly stronger dollar also reduced safe haven flows. Importantly, this wasn't driven by any fundamental shift. Physical shortages remain acute. Industrial demand is structural and growing, and India's import needs aren't going away. So on this last trading day of 2025, what should we as Indian investors do now? First, perspective. Despite the sharp 79% pullback from the peak, silver is still closing 2025 with 160 to 180 gains, one of the best performing assets in decades. The long-term bull market remains firmly intact. Analysts widely expect deficits to persist with India's solar targets, 500 GW renewable by 2030. EV adoption and electronics growth driven even higher demand in 2026. Many forecasts point to 2.75 to 3 lakh per kg or more over the next 12 to 18 months. For long-term physical buyers, those stacking for weddings, Akshaya Tritiya, or as a general hedge, this dip is a clear buying opportunity. And hallmarked 999 purity bars or coins from trusted banks, jewelers, or authorized dealers. Physical premiums in major cities are still elevated, signaling real underlying shortages. Don't wait for the absolute bottom. MCX traders and leveraged players exercise extreme caution. Silver has always earned its nickname, the Devil's Medal, for good reason. Volatility can spike both ways. Wait for clear stabilization and confirmation above 2,45,000 to 2,50,000 before adding fresh longs. Key support lies at 2,30,000 to 2,32,000. A break below could see more short-term pain. New or cautious investors start small, diversify across physical ETFs and perhaps sovereign gold bonds as a complement. Never go all in one asset, no matter how strong the story. Risks to watch: further year-end tax loss harvesting, rupee strength, or additional margin tweaks could push prices lower short-term. But these are tactical. The multi-year fundamentals scream higher. Bottom line, 2025 has been legendary for Indian silver investors. Historic returns despite the dramatic year-end jolt. This correction looks like a healthy breather and reset in an ongoing secular uptrend. If you're bullish on India's green energy revolution, tech growth, and silver's irreplaceable role, consider using this weakness to build or add positions responsibly. And I now have Dr. Jaijit Bhattacharya, President CDEPR, joining me on the broadcast. Dr. Bhattacharya, welcome. And I'd like you to simplify this to our viewers and explain what we've just spoken about.
So I think what you have explained is actually very, very detailed and very good. Essentially, prices go up based on demand and supply. Demand has been going up for all the reasons that you mentioned. There is a real industrial demand because India's electronics manufacturing has gone through the roof. Apple itself has produced about $20 billion worth of iPhones, and all of these electronics and solar panel require enormous amount of silver. We are producing half of our renewable energy from solar panels. Those solar panels are being manufactured in India. All of that requires silver. So there is a huge amount of demand for silver. Along with it, there has been a supply crunch from the countries which have traditionally been supplying silver, which is roughly the Latin American countries, Mexico, and so on, for various reasons. So the obvious outcome of this situation would be the prices should be going up. And that is what has happened from December of last year to December of this year, where prices of silver has been very significantly going up to about 150% approximately. However, in that context, what has happened is in a period of about 24 hours, the silver price have crashed by about 7 to 9%. And that was a little perplexing as it unfolded. But the real reason are really twofolds. One is that the traders have been doing profit booking because a lot of the investments was investment based. There was speculation. So speculators were involved in using silver as a hedge. Also because there is a perceived significant amount of risk that is there in the world because of all the wars that's happening, because of the of the economic clashes that's happening. So people would like to preserve their wealth and move it into safe havens such as gold and silver. So therefore, a lot of silver was being bought. But under the current circumstances, people wanted to book their profit. So they sold off their silver and held on to cash, which is where some of the fall happened. Also, because of the silver prices going up, typically silver to gold ratio is about 65-70 is to 1, which is 70 ounces of silver is needed to buy 1 ounce of gold. However, because of the current rally, it had come down to 55 is to 1, which is you need 55 ounces of silver to buy 1 ounce of gold, which essentially means that silver got suddenly overpriced. If it had crossed 50 is to 1, then there would have been a massive sell-off of silver. But as a precursor, people have started selling off silver because it has become overpriced. So these are the two factors which led to the sudden drop in the price of silver. But I personally believe that will recover in the next few trading sessions, especially in the new year, because the investors will be coming back. There is a secular demand of silver, and that will just continue to go up. So there are reasons why the silver prices will stay firm, and therefore moving forward, we will still see silver prices to be quite firm.
All right. Now, Dr. Bhattacharya, if I ask you, how unusual is this kind of move in silver compared to historical cycles?
Well, we have had such cycles earlier. In fact, the Chinese economy in the 14th century and the 15th century was based on silver. A large amount of silver was being consumed by China. When the New World was found by the Europeans, they extracted a lot of silver and dumped it, which crashed the Chinese economy. So we have had cycles of silver prices going extremely high and extremely down. It is, after all, a commodity, and just like any other commodity, prices do fluctuate quite significantly, just like soybean prices, prices of metals, similarly prices of silver. It has been going up and down. But what has happened in India in the last 12 months is actually a bit stranger than what it normally happens. I wouldn't use the word strange, actually, is little unusual is the right word, because a commodity price such as silver going up by 150% in 12 months is actually quite extraordinary. We have had cycles, but not of silver and gold going up and down in such significant fashion. So these are unusual days, and this is probably because of the tremendous amount of geopolitical risk that we see, which is leading to these cycles of the commodity going up and down. So overall, I would say nothing to worry about, but the speed at which it went up in just 12 months is something quite extraordinary.
All right, Dr. Bhattacharya, thank you for joining me on the broadcast. Appreciate your time. And with that, we're slipping into a short commercial break. We'll be back shortly.